Welcome, ladies and gentlemen. This is Anthony with Simplified Profits. Glad to have you. We're going to do a quick episode, just an update on the transparent account, just to kind of give everybody an idea where it's at. Those who've been following, those who haven't, might be worth tuning in. Go ahead and subscribe and turn on your notifications. We do shoot out live trade posts when we enter or sell anything. This is all for educational purposes on just how to grow a small account into a big account. Really simple. We're adding percentage of our income and we're slowly compounding profits. So we entered 2 positions today and we're pretty much up on all of them, up on everything in the portfolio. GD, we are roughly down. But if you add in the dividend that we were in time to get, I mean, it'd be $3.90. So not really down 0.2%. But I know people may look at these positions and the small amount of gains and think, whoop-de-doo. That's for people trying to get rich overnight. All right. So far, the account is roughly up it was up 8% until we added another 20% of our income. It took that down to about 5%. And we're going to keep grinding profits over and over and over and keep adding our income. That is the goal here, and see how quickly we can build this account. We don't like losses. We don't plan on taking any losses. We like to manage our positions. Well, let's go ahead and dig in on what we got. Right now, we have about 85% of our cash working. We have 436 bucks. If we got to average down on something, we'll probably just kind of let that chill out. Probably won't add anything else. Just keep that on hand in case we need it to manage one of our positions. And we got income coming in next Friday, so about 6 trading days away from having income hit the account as well. So we entered. I've been waiting to trade this. This is an ETF that just came out. It's a 4X on S&P 500. And we've actually veered a little bit from our book. If you ain't got the book, Simplified Profits, pick it up, follow the channel, study the channel, kind of see what we're doing and how grind and compound profits over a long period of time get you rich a lot quicker than trying to get rich overnight, ladies and gentlemen. But quadruple X here, we entered. Price paid was $28.27. Last price was $28.73. We're up about 1.6%. Now it's a very small position, and we did kind of not buy it in the oversold territory. So we kind of went against what we usually do. But when we get to the stock charts, I'll show you why. So we'll jump from here to the charts. Give me 1 second. Let's go over these other positions. Only made one entry on that. And if we need to manage it, we'll manage it with the rest of the cash or cash coming in. So now DFEN, we're finally getting up on that position, about 0.67%. We've had a few buys on this to bring our average. Is why you keep cash on hand, the lower your average. Our average is 21.15. Closed the day at 21.30. We got 58 shares. This is our biggest position, 41% of our portfolio. So hoping to lock some pretty good gains in on that. We'll go to the stock charts and talk about that here in a little bit. Now, DIV, I added this because I'm doing this account for educational purposes, but usually I keep a long-term investment income account and a trading account, and percentage of my income go to each, and I manage those wisely. Okay, so DIV is probably one of my favorite income. Especially if you look at what they hold, and they usually pay about a 7% dividend and pay you monthly. Okay, so for those of you out there trying to build an income portfolio and build some dividend positions, I'm going to go ahead and build a long-term position on this just for the heck of it in here. It'll be a percent of our long-term investment positions, which I don't have any of those right now. We closed out of those to your previous video. And you'll have to go back to our previous videos. I'm not going to touch on those right now. and GD. So we have, but anyway, DIV, back to DIV. We entered today at 1678 and a half. It closed at 1682. So we're up a little bit on that, 0.21%. We only got 10 shares. So it's not nothing. We didn't go big on that. Okay. But the thing is, that's going to pay us monthly. It's going to drip into the account, into the ETF, and we will continue to add shares to that on oversold pullbacks. Might not be much, but hey, we'll see how we build that position for educational purposes. And then we got GD. So GD, it disappointed me, but it happens. So today was the ex-dividend date. I definitely thought we'd be up a few percentage. I was expecting about 3-4% up on this prior to the dividend. Just a little place to park a little bit of money, make it work for me. But right now we are down 0.7%, which if you include the dividend, we got a total of 3 shares. This is our average that we did buy a couple times. And with the dividend, we'll be getting paid is like $3.90. So it's about a 0.5%. So we're really down 0.2%. And looking at the charts, I feel like it's definitely going to ride its way up. I think a lot of these defense sectors and defense stocks was waiting on our government to pass a bill for funding, knowing the government's not going to shut down. We see this rodeo and circus many times over. Okay, so that is where the transparent account is at right now, ladies and gentlemen. And let's dive into the stock charts. Bear with me. Let me swap on over to the stock charts. All right, ladies and gentlemen. First thing we have up is DIV. So it crossed over the 200-day moving average and it's pulled back to the oversold position. Now, when I'm buying something just for income, it is one of my rules to stay out of anything under the 200-day moving average. But when it's just strictly for yield, I'm not too concerned, right? I buy on pullbacks. I build a good long, low cost average in the position. This is one that my kids actually enjoy buying. I've got 3 custodial accounts. My 2 youngest, when they do something, let's say I tell them I'll pay them $20 to pull weeds around the house, and they pull weeds. And when I pay them, I say, hey, I can give you $20. What I can do is I can match it, so you'll have $40, and then I'll put it into an asset, an ETF that's going to pay you monthly. So you're going to make recurring revenue off that $40 monthly. And of course, they make the smart decision. They get excited about it, and they take the 40, they take the 20 and the 20 match, and the dividend, just something to kind of excite them. So this is a position I have my kids putting some money in, really just their chore money. They do have some positions in some other all-star mutual funds and a couple other long-term positions we've talked about on this channel. But we did enter this today just on that purpose. So it's oversold. It may go back up 4%. It may start grinding higher as the rising rate environment kind of cools down. But I'm not really looking for a huge trade on this, a huge amount of growth. This is strictly an income providing position, strictly for dividends, just because I know there's a lot of people out there, including myself, who love investing in things that pay dividends. It's nothing like getting that email every month that you've been paid for not doing nothing but putting your money to work. All right. So let's jump into these other positions. GD. This thing broke over the 200 days, been grinding up the 20-day moving average, pulled back to the oversold position finally. That would be a good swing trade, especially with everything going on around the world, ladies and gentlemen. The Middle East is heating up. You got North Korea talking all types of crap. We're in 2 wars, if not 3 already. But as you can see, it kind of trickled down a little bit. We average a little lower. But I'm still thinking we get a good 3.5% out of this. And ladies and gentlemen, it's not big gains as far as the dollar amount goes, but it's about managing your positions and it's about percentages. Okay, this 3% Might not be nothing in this position, but start adding zeros on it. Okay, think that's a $7,500 position instead of a 750. And as the account grows, always trade your account like you're trading $1 million account. All right, if you got 10 grand, trade it like it's a million. You're not going to go all the way in on a position if you got $1 million. You're going to scale in. You're going to be wise with it. Okay, same with $1,000 account. Focus on the percentages, not the dollar amount. Otherwise, you're going to just throw it all in a fire trying to get rich overnight and be upset at the market. Okay, definitely learn how to manage that and have calculated entries, calculated strategy, put your money to work, and take profits. All right, avoid losses at all costs. So let's jump in over here. This is DFIN, which I should really have ITA in that because that is the stock chart we are trading it from. ITA, as you can see, it broke up past this consolidation a while back, had a pullback. We entered this as well. Well, we entered DFEN for the swing up. Of course, it pulled back some more. And what did we do? We more than doubled our position, brought our cost average down. And as of right now, we are up, and this position is still oversold. But we're up, it's oversold. We got crap breaking out all over the place. We got the budget passed for funding. BA is probably at the last of its huge pullback. So if that runs up 5%, I'm hoping to see, 10 to 15% gain in this, depending on how it moves. Hopefully it moves quickly, we can lock that in quickly. If it looks weak at all to me, starts fading and we're up 10%, I'm gonna lock it in, just like we did on SOXL, ladies and gentlemen. So our first trade for the year was SOXL. We bought it here, and we locked in 13% gain. Now our goal was 20 to 30%. We would have got our 20% because it didn't hit overbought. Remember I said we should be looking at SMH. Okay, so it hit overbought, but this is the chart we look at, SMH. SOXL is going to be weaker due to decay, but it did. If we would have held to that got overbought, which is our normal strategy, we would have got our 20% swing. All right, 22%. That's the swings we're used to. Right now, this is going to be a crazy year, so I'm going to be a little more cautious. All right, I'm never greedy, but at the same time, sometimes I'm a little more cautious. I like to lock in profit before that profit disappears. There's an old saying, if you don't take your profit, somebody else will. All right, so that's DFIN, hoping to lock in 10 to 15% gain in that. And hopefully it just takes off and we get more in that. But we'll see. It could pull back and we could be averaging lower again. All right, SPY. Now this is the position. It didn't come close to the oversold. It oversold here and recovered quickly. I think that's when we hit the SOXL trade. Had a little pullback. Minute pullback. DIA pulled back very small, almost, I believe at one point my stochastics was lower than that, but it doesn't look like it. Actually, the day was red, it might have been in, I don't know, but look at these tight Bollinger Bands, okay? To me, that shows consolidation. And the way this market has been, it's just been a beast. I know a lot of us look around and, it's probably going to break out, honestly. I know a lot of us look around what's going on in the world and we think, man, there's no way the market should be this high. It needs to be. I think it'd be healthy for a pullback down to this area, honestly, to retest the 200-day on the weekly would be healthy. But, ladies and gentlemen, people got to put money to work. And you got to understand, just because we look around and we see people struggling, that don't mean the businesses are struggling, okay? They're raising their costs, cutting employees. They're making that balance sheet look really good for the stockholders, okay? And that's what you got to understand. The middle class, the people out here is hurting. Now, eventually that's going to hit the market when people just have no money to spend and they're just piled in debt. Yeah, it's going to affect the market. But right now, money's going to work. Um, and to me, when I see these tight Bollinger Bands, the quick, small pullbacks, and how strong it looks, like I said, reading the charts like investor psychology, it's like Psych 101, that looks strong to me. It looked pretty bullish. Okay, so I'm thinking this thing actually breaks out. Now I could be wrong. This could become a double triple top, and we could get that pullback that would be healthy. But I'm only in a very small position in it. You can see, I think the value was 402, and we were up $6. So not a huge thing. So we will be able to manage that position quite well. But that is where we sit as far as the charts go. Why I made an entry on this and DIB today. And hey, I'm honestly looking at SPY. It looks strong, ladies and gentlemen. I mean, stronger than I expected or would have anticipated. And just like most people, waiting on that pullback. Sometimes you can be amazed at how many times the market shouldn't be this high. I'm not buying this pullback. I'm not doing that. I'm not, and you just miss a ton of profit. I'm reading the charts. I'm not listening to the noise around me, and I'm putting money to work. Okay, so that is that, and I'm out, ladies and gentlemen.